Hey guys, and welcome to another installment in the V3 of the Liquidities course. In this video, we are going to be covering inducements and how they do work. Okay, so looking at this naked chart, I'm sure a lot of us would get lost on our structural points, trades, and just overall everything that's current, right? So let's be aware of this. So we have our Asia sessions on, which are these gray boxes. You can see how price came down here during Asia session, shot up, hit off the breaker, came up, and then we tapped in over here to run liquidity, and prices just melted. Okay. So in order to get into the context of this week, we do have to identify this being a valid liquidity run. The reason this is a valid run is because there was no structure here, so they engineered the move. The reason no structure is because there's no, this is the high, the low, the high, the low. This never established that new high. This is a low that established a new high, obviously up here. So the liquidity beneath this is valid. Okay. You can see how why when we ran under, just a pure reaction. Okay. Now, remember how we've been covering mitigation, demitigation, all of that. Notice how price comes into this POI, right? And dips down, and then pulls up at this breaker. Now, why didn't it just continue down? Why didn't it hit this POI, this POI, this one? This is simply because this is the first POI that it has to do what? It has to unwind it, which we're going to cover in other videos. It has to unwind it to generate liquidity on the low and the high. That way it can sell or buy. In this case, you can see where they unwind it at a false POI because this has no liquidity backing it. Also, this happened during Asia session. So they came down, right? Didn't even hit the POI. They just hit the breaker. Price comes up. This is not valid. There's no low that's been established. So they're coming up, AKA, right, inducing, which you have that here. You have the inducement, followed by the strong move that sweeps the equal highs, which is a form of engineered liquidity. And then you get the actual move down, which is the sell, which is going to target that low. So what does this look like on a smaller time frame when we actually get into it? So let's remove a couple of things. Again, right, that demitigation coming down, this is not valid in itself, right? So you would stick out, again, strong move down. We have the breaker because of the imbalance. So here they're demitigating and unwinding this as well. And then the false move, again, happens during Asia, and then our form of demitigation here. Now, this is the inducement. There's no structural points anywhere in here and no valid POIs. Okay, so here, the inducement, which is right here, and then they falsely mitigate during Asia. So this is the false move during news, the run, okay? But the inducement is the strong move coming up on the inducement points here because this is not valid. So we get that strong inducement up, inducing people to buy, even re-enter on this wick, the run, and then what happens? Price melts and takes everyone out, and this continues to that next liquidity spot. And so now when we actually go into a session and we start looking how we get in on something like this, we can see it beautifully here. We mitigated imbalance that was in Asia and never formed a new low. So that was false. This was the inducement during the news. Again, people entering on the breaker, even trying to enter on the block, just entering false trades. Inducement because it had to pull the liquidity, so we know not to get trapped, okay? Right? Boom. Again, you wouldn't enter because this is just guessing. Price could have completely continued tumbling. But look at this. There's no structure backing this, and then we get that final inducement to rip through right here. So we have the initial inducement, and then we have the falsified inducement, which again, this is just not valid. Because there's no structure or liquidity backing this. Drop down to that 1 minute after we have that last inducement here, right? And it looks clean, right? It looks very clean because we have that valid structure, and then we think maybe it'll push off here or down here. But again, you have to look at the bigger picture. So now what do we have? Strong move down. And what are we hitting off of? The breaker. So while some people and smart money traders are looking for those re-entries on those buys, we can see, okay, dip down, right, hit the breaker, dip down, broke this point of structure, came up. We did not trade above that high, gave us equal highs, boom, traded down again, comes back right into the breaker. Now, why the breaker? Again, because of the imbalance. So we could have entered this trade right here and be floating 45 pips right now, just knowing that it's not a breakup structure, but these are the inducements, and the strong moves down here are the breakup structures. Okay, so I hope this helps. Be sure to look at the PDF. Right, again, same thing. How this is not an inducement but a break, not an inducement but a break. This is the inducement, and again, this is the inducement because it's inducing you to sell off invalid points. No liquidity, no structure. It's the breaker, takes you out. And then you're trying to re-enter on buys, takes you out again. Okay, so I hope this helps. Please be sure to review the PDF, and I'll see you in the next one.